Hello guys, welcome back to FX Beethoven Forex Algo Decoding. My name is JD. Today I'm gonna show you guys how to join a trend. This time I will be discussing the secret of base candlesticks in a trend so that you guys will be able to start finding new ways to join a trending market. So before we continue, I would like to remind you guys you need to subscribe to this YouTube channel because I'm gonna be dropping some content that will be helping you guys in your trading career. So without wasting our time guys, let's get started. So guys, this time before I show you how to join a trend using base candlesticks, you need to understand what is a base candlestick in a chart. So to understand a base candlestick, you need to understand what we call spread, candlestick spread. So when I say candlestick spread, understand the candlestick body. The body of your candlestick is what we call a spread. So this is why you will hear me maybe sometimes in the future saying VCA, volume spread analysis. So we simply mean a study of the body of a candlestick compared to the volume to see where institutions are putting money. So this time I'm showing you how to identify base candle using the body of a candlestick. So all you have to do is to look at the body of your candlestick and then compare to the next one, and you try to see which body should act like a base or which candlestick should act like a base. So what you have to do here, as market is pushing down, for example, let's say this is a monthly time frame or 6-month time frame range. So you have this candlestick. If you compare the body of this bearish candle to the body of this bearish candle, you will see that they are almost the same, right? But if you compare the body of this candlestick to this one, you will easily see that they are not the same. This one is smaller, this one has small body, where this one has kind of bigger body compared to this one. So this is a stronger message in forex, especially when you have a kind of downtrend like this. When you have a high momentum downtrend like this and you see a candlestick creating a small body like this, this is a strong message. This means even if you have a momentum in these candlesticks, these two candlesticks where market is pushing down with a high momentum, but here there was something unusual because market was not able to continue with the same speed, right? So there was kind of battle going on here. There were some kind of fight happening in this area. So this means this is a crucial area. This is a strong area to pay attention to in a future move of the market. So as long as you see another candlestick, for example, pushing down, expect that you at any time in the future you are going to see a kind of candlestick creating a pullback into this area. For example, if you have studied the concept of ranges, you understand that of course there is a pullback here. If you understand how candlestick moves, there is a pullback here. So meaning there will be a small range with some liquidity inside. Market will come back to trade into that base candle to continue a downtrend. So this is what we call a candlestick base, or sorry, a base candlestick. This one, when you have beautiful candlestick pushing down, but you see one candlestick with a small body. This time you know this is a base candlestick. The same here for a bullish scenario. You have a market pushing higher with a beautiful body. Just use your own eyes. You guys are going to see a candle and you're gonna say this is really a base candle, and you see another candlestick forming here with a small spread or a small body. After creating a small body, you see another candlestick pushing with a high momentum. Expect that at any time in the future, market is likely to come back. Another candlestick is gonna open here, open on this level, and it may create a pullback into this base candle taking out this low, and then we push higher. But it's not a must to have like a candlestick in the middle. You may even have one candlestick opening here and it pushes the price down, pushes down to trade on this area, and immediately we go higher. What matters is to know this base candlestick and have the concept of liquidity inducement in your mind, and understand the concept of redistribution and reaccumulation, and then you are ready to go, right? So this is what we call a base candlestick in a trend. You just need to compare the bodies of your candlesticks, and then you know which one is likely to act as a base, especially when it is in line with what, when it is in line with a key level. So you have to know that when it comes to trading. So without wasting our time on talking too much about this, I have to take you guys to a chart, and I'm gonna give you a simple example on a simple downtrend we have on the GBP NZD. Then you will be able to understand what I mean here. Then this will create this will create awareness. This will help you guys start understanding how to join any market using this technique, because trading the forex market is all about understanding different trading techniques you can use, because not every strategy is gonna work in every market. You must have different ways of approaching any market condition. So let's go to the chart and I'll show you some examples. So okay guys, this chart, as you can see, I have chosen higher time frame structure. I have chosen a higher time frame structure, which is 6-month time frame. The reason you have to do this, you have to use higher time frame, is because you want to identify beautiful trend, beautiful ways to join the market, and you get what you get, a beautiful move, a bigger move, explosive move. But the same technique can be used even lower time frame if you are scalping, as long as you know where you are on higher time frame. I always encourage you guys to use the concept of ranges when it comes to trading. So this time, if you look at this level, you easily see that market was pushing down with a beautiful candlestick here. This is a beautiful candlestick here. After market pushing down with a beautiful candlestick on this level, you see another candlestick forming here with a small body. This candlestick is sending a message. Now we see another one pushing down with a strong body. A strong body here. So if you compare this free candlestick, I mean this one, this one, this one, this one, and this, you're gonna easily see that market. You're gonna easily see that market is not behaving the same on these three candlesticks. So the first one is pushing down with a strong body. The next one is pushing down with a little body, small body, and the next one is pushing down, engulfing this one with a beautiful body. So once you see this, expect that market is likely to create a pullback into this base candle to continue a downtrend. If you go back and backtest this concept, you're gonna see a proof of a concept. For example, here, look at this strong body pushing down, another candlestick with a small body, another candlestick with a strong body. Then as market is pushing down, it is creating liquidity on this level, and it comes back to grab liquidity, trading on this base candlestick we have here. Trading on this base candlestick we have on this level. As you can see, market is trading there. So the same on this area, This is why you see this candlestick is pushing higher. This candlestick is pushing higher to trade into this area, to trade into this candlestick. Most of the time we prefer to see candlestick trading on the body. When it is pushing back, we want to see at least this candlestick trading on the body, on the close price of this candle, on the close price of this candle. So my preference is always like this as my zone, from the close price all the way to the high. This is my zone. This is what I use when I'm trying to join the trend using this technique. So I always prefer to see this candlestick pushing back to trade at least on the close price of this candle if you are bearish. If you are bearish, move like this. So if you zoom in here to lower time frame into this zone, if you zoom into lower time frame here, if we zoom into our time frame here, and then you change to, we are on 6 month, if we change like to weekly or daily time frame, you're gonna see the details. You're gonna see what? You're gonna see the details. So here, if we change to daily time frame or monthly, first of all on monthly, to show you what was happening exactly on monthly, you can clearly see that you have kind of candlestick forming here. So you have your range, of course, you have your lower low, lower high. Market is going down to create a lower low here, but first of all it is forming some liquidities that will be taken in the future. So you have a breakout structure. We didn't see a successful pullback. Instead we have liquidity. We have secondary liquidity forming on this area. So we need to see price coming back into our zone to look for our point of interest sitting there before we push down. So meaning our sale opportunity should be above this level, because if you know the concept of liquidity inducement, you understand what I mean here. So I'm not choosing this candle, I'm simply putting above this high, because I know the area market is gonna take before pushing down. So if you study the concept of liquidity, you would easily understand what I mean here. Now if we change to like daily time frame, you will easily see what we mean here. As market is pushing higher, and is looking for internal structure to continue what? To continue a downtrend, because you have a clear mitigation forming on this level. Market is pushing higher, creating a beautiful Wyckoff redistribution. In this area. Market is pushing higher to do what? To induce liquidity and start pushing down. So as traders, I'm not talking about entry point and refinement. I'm not going to talk about Wyckoff that is forming on this area. I'm not going to talk about confirmation. I'm simply showing you the right area of how to generate a trend, how to identify potential areas to join a trending market. So you can use it on monthly time frame, trying to identify a best candlestick or in a high momentum candlestick, a high momentum trend, and you find where market is likely to create a beautiful pullback for you to join that trending market. So you know this is gonna be a kind of strong move to downside, Then market will create some pullback. We have broken the structure, another pullback is coming in. Remember the concept of range. Before we continue down, we need to come back to look for something in this area. We need to come back here to look for something above this area, then we continue pushing down. So that is the fact of the market. That is how the market moves. So you need a clear understanding of all of the concept we use so that you can start trading the market. So this is what you need to know as a traders. If you're having struggle joining any market, especially a higher time frame trend, you need to understand like this concept. For example, the concept of bears candlestick in your market, the different ways of approaching price action depending on the condition of the market, but you need to have these skills when you are trading. So make sure you subscribe to this YouTube channel. My name is JD. I want to give you guys these skills, so make sure you subscribe to this YouTube channel, so whenever I upload a new video, you will be able to study something new that will change you guys. So Wyckoff distribution will be looking like this. This is how I'll be naming a Wyckoff distribution every time we're going to take any trade as a continuation pattern. So we are not going to talk about the Wyckoff today, but this time make sure you backtest them and see how it works for you. So thank you so much. See you next time. Make sure you subscribe, make sure you share this video. See you next time, guys. Good luck and good trading.